If you're tired of losing money trading NAS, then this video is for you. I'm about to blow your mind with a high win rate strategy that can literally help you to clock consistent profits trading NAS Monday through to Friday. So if that's something that you're interested in, stick around with me until the very end of this video, because I'm about to give you a 4-step process that can literally change the game for you. So without further ado, let's get right into it. Now, if you're new to this trading space and you're new to this beautiful face, I'm Carrie, and literally what I do here at All Stars Trading is to help new traders or even traders who've been trading for decades that are not profitable. I help you to become profitable by sharing solid gems here that can literally change the game for you. So if that's something that you're interested in, kindly hit that subscribe button, because it don't cost you nothing. It's free, right? So hit that subscribe, share this video with a struggling trader, and also remember to hit that notification bell so that you're always notified each time I post a video. So let's get into the charts. All right, All Stars. So before we even get into setups, we want to fully understand the market structure. So that's step number one. We're going to be, zoning in on the directional bias. So we're on the 4-hour time frame, and we can clearly see that price is literally making what? Higher highs and higher lows, right? We keep moving higher, and you can clearly see that we're in an uptrend, right? That's literally what we see. Always remember to look for your directional bias. You can do this on the 4-hour, but you can also do it on the 1 hour for those of us who don't want to go to the higher time frame. All right, so we're marking our highs and our lows, and even if we draw a trend line, we can clearly see that we are quite bullish. So once you understand the market structure, that is going to help you, because the best trades happen when you trade with the trend and not against it. So kindly remember, it's very important for us to understand the trend direction, because we want to trade with the trend and not counter it. All right, so that's a pro tip. Make sure you make a note of it, especially if you're a newbie. Now we want to be zoning in on these areas where we literally have price taking out the highs and grabbing the liquidity above, right? So liquidity zones, they're also very important. And one of the key things that when we're looking for supply and demand areas, a lot of traders, they tend to not bear in mind that there are often what we call liquidity grabs. So let's take, for example, let me zoom in. All right, let's take, for example, here, zoom in so that you can see clearly. Okay, let's take, for example, here. This is a major supply area, and supply is where we've got a massive push down aggressively. Yeah, you can see all of this volume in one candle, massive push down. So you want to highlight areas like this. This is your literal supply zone. Okay. All right, let's adjust, because we want it to just be wick to wick of the candle before it. There we go. It's covering that green candle. All right, so we'll pull this across. All right, we'll pull this across. There we go. So this is literally a major supply area. So what I'd be waiting for, right, once I've got my trend direction and know that we're buying, I'd be looking for us to break above this area right here where we're having major resistance at this point. I'd be looking for us to break above it and then turn this area that has been, a little bit of strong resistance into support for me to buy, right? I'd have to clear the path here before I buy. But in essence, because I'm in a range at this moment, I realize that this is literally or supply area where we just keep coming right in this area and we keep selling. So once we get a top of it, right? Nice double top here. And whenever you see a double top resistance, that means that we're going to push down, which literally we did. All right. So I want you to bear all these things in mind when we're looking on our 4-hour time frame. Where are these areas that we call supply and demand? Now, your demand area would be here, like here, where you've got that massive push up, right? So we could also highlight this because we're consolidating. So this is our demand area because this is where we've been pushing up from. So let me explain liquidity grab to you. There's money left here, there's money left here, and this is a liquidity grab, right? So this, what we've done, we've literally swept the previous low and we've taken out all that liquidity area there. So this is a liquidity grab. So oftentimes traders mark these areas out that are supply and demand, but they don't pay attention for the liquidity grab where the banks literally push the market below these areas before they channel it in the right direction that they actually want it to go. And sometimes these are areas where we've got our stop loss, because if you're looking to buy here, your stop loss more than likely would literally be at this area, which is 20,500 there about. So you would have been smashed out with a loss at this area. Right. So you wait for areas like this. You wait for these plays to happen before you take your play. Right. This is a liquidity zone here. Right. And you want to see the liquidity grabs because this means that the banks are at work. So once they've done this and now you realize, look, so you allow them to come back into the zone, create structure. Now what do you see? A clear higher high being formed, because guess what? We didn't come back all the way here. Then we kept moving. So right here, right, even if you decided to say, you know what, let's get in here, you'd literally be making profits back into your supply area up top. So you want to be mindful of this, right? You're looking for buying opportunities because we're bullish, right? So in essence, I've marked out where I had the massive push down, and I've marked out where we've been pushing up. I'm waiting for this to happen, which is the liquidity grab. So to take out all these other traders who were putting their entry here and putting their stop loss here. I waited for this to happen so that I ride the wave with the bank back into the supply area. All right. So I hope you understand liquidity zones now. Money's left here, money's left here. We've taken out all of that and then we've pushed the market higher. All right. So I want you to understand fully what we're doing on the 4-hour time frame. So we're marking out our higher highs, right? We're marking out our lower lows, and we're really looking for key liquidity zones, right? Which I've highlighted because what we're waiting for is a liquidity grab. So let's say we see this, we can decide that, all right, let's go down to the 15-minute. This is the liquidity grab that was identified. So we would wait on a play like this, right? When we see this, we'll be in smiles and we'll say, this is what I was waiting on. So we don't rush our entries because we know that this is coming, right? So when this comes, literally, you'd be able to now take advantage of it, because if we're moving down, you could literally look at your trend line and see when there's a break of structure to carry market in the opposite direction. So we've got that downtrend and you can clearly see now that we pushed up, right? But even if your entry was outside here, when you came back, you would be coming back to entry, so you'd be still in a good place, Remember, the market moves in waves. It will go up, it will come back down. And that is why oftentimes if you hit TP1, which is like a one-to-one risk to reward, you will often recognize that after it hits TP1, what does it do? It comes back to your area of entry. And that is why it's always best to go risk-free after TP1. All right. So literally, I want you to fully understand that when we go on the higher time frame, we just want to get a sense of direction, right? We want to buy because we see that price is bullish, so we're waiting on price to tap into this liquidity zone, which it did. It grabbed the liquidity there, right? So the market always targets liquidity before making a major move. Always remember that. So you mark out your previous highs and your previous lows and your imbalance zones. So if it is that you've got areas that you've got gaps in the market, let me zoom in here. All right. It can be physical gaps like this, or you can literally have fair value gaps in between the candles, right? So this is a physical gap. You can see them quite often. So you know that once those gaps are formed, price will come back into them. But you will also see oftentimes where you've got imbalance in the candles where literally price must come back into this area because of the imbalance that's left here, right? So literally you'd see that price will come back into this area eventually. Eventually. Okay. So I want you to pay keen attention to those liquidity areas when you mark out your supply and your demand zones. Expect that we will have a liquidity grab. The banks are going to push price a little bit lower to grab the money of the newbie traders or the traders who are impatient and just hopping in the trade and not waiting. All right. So once you spot these zones, then that's when we start gearing up ourselves to take the big move. So we've spot the liquidity grab here. Now let's get into step 2, which is our entry criteria, right? This is our entry criteria. Literally, we've got our moving averages on. So we've got our moving averages on, which is 8 and 14. And with the moving averages on, always remember that if we're below the moving averages, that means we're bearish. If we're above the moving averages, that means we are bullish. So pay keen attention to when the candlesticks are sitting above the moving average. That means price is going up and we're looking for buys at that time. All right. So we've got these moving averages on as an added confluence. You wait for price to grab the liquidity, which is what it did right here. Right? So if price sweeps a major high, look for a rejection and a break of structure downward. If price sweeps a major low, this is exactly what it did. Price is sweeping a major low here, right? Once it sweeps the major low, we're looking for the rejection, right? And a break of structure upwards. So that's why I put that trend line there. So let's zone in on this area. So break of structure, right? And look at this. Literally, we're outside. We've broken above the trend line and we're sitting above, and each time we're there's major rejection. Keep looking at the wicks, and then you see this massive engulfing bullish candle. That's telling you price now wants to push up. Now you also had a confirmation even right here with the moving averages showing you that the blue is on top, which means that we're bullish. Price is sitting above the moving averages. So even if we waited, right, because we got a break of the trend line, we got a retest, and then we've got this massive engulfing bullish candle, then we kept kind of playing a little bit at the zone, but then we made a major break. Right? With this, you'd realize that this is your opportunity. You could enter right here, right? Right here, even if you entered, let's say here, after we got this break above here, because now you see structure being created. So let's say we enter for a long position after this one. We're literally going to put our stop right there. We could have a 1 to 2, right? Or a 1 to 3, right? Now, literally, even if you meet 1 to 2, because a lot of individuals trade that way, there is nothing wrong with that. You would have made profits and you would have been out of this trade. Now, one of the beautiful things that I want you to kind of pay attention to is the fact that you've made 1 to 2, right? And you've made your profits right here. But bear in mind, look, we came back into the same area right here. So now this is no longer a valid zone because it's been wiped out. What is now your area of interest is this area down here, right? Because that's the most recent low. So even if, and I want you to listen very carefully, even if you didn't get in here, you could have waited for a tap of this same zone to get in on the trade. So you don't get in prematurely. It's fine to wait for a pull back into this area, right? And then you could ride the wave. So when you get this pull back into the area here and you see the rejection, right? Major rejection, double bottom formed right here. You could literally say, you know what? Once we get a break of this, so I'll put here. Once we get a break of this, so you're waiting it out for full confirmation. So once we get a break here, right, you can literally see that price is literally trending higher. It is, right? So you could literally say, okay, all right, I see that we're moving higher. We're sitting above the moving averages. We've got a crossover here and we're sitting above it, right? So literally what you could be doing, you could wait for this massive move, and as soon as you get the pullback and the rejection right here from the moving average, this could be your area where you decide, because look, this is actually just a retest of where it broke out from, right? So you want to pay attention to this. Not a full retest, but just a rejection of that area. So let me just say, what I'd be doing, I'd wait on structure to pull back. And then once I get this candle formation close, I'd be looking to get in the trade. And what I'm waiting on, right? Even though I've got my 1-to-1 here, while I secure my profits there, I'd be working on getting back into my supply area here. So what I'd be doing, right? I'd be clocking my take profit 1, which is a 1-to-1. But at the same time, I do believe price would get back into this area, right? And I could make at least a 1-to-5. Let's put it at 1-to-5. There we go, right? Now, you may go back into some drawdown here, but that's really up to you if you want to do that, because what you would be doing while the trade is playing out is trailing your stop, right? You'd be trailing your stop. So if it comes back after it, if you get that 1 to 2, that's 2%, you'd be trailing your stop and riding the wave higher. No, not everybody has the guts to hold a trade that long for it to get to their, biggest TP or 1-to-5. But if it is that you want to, you can, right? But just ensure that you are in it risk-free. That kind of gives you a little less anxiety. So you're not having any money being lost, but you're in a trade that's already in profit. So you're not just putting break even, but you're bringing your stop. So let's say this is your stop. You're bringing it closer and closer into profits, right? You're bringing it closer and closer into profits. Closer and closer into profits. The more it gets into profits, the more you trail your stop. And that's a phenomenal way of securing your profits. That's what I do every day when I'm in a trade. Oftentimes, I may have an open TP, and with the open TP, I'm trailing my stop. Right. So that's one of the beautiful things about you even trading on your computer. You can literally just move your stop, just like how I'm moving this line, and adjust it. Right. So this is your entry. You're waiting for the liquidity grab, right, by that area. And once you get that, you're looking for a confirmation of the moving averages crossover. And you're also looking for some signs of strong price action with some massive, you know, volume and some massive engulfing candles. Right. So once you get that key indication, right, you're marking your zones, waiting for a top of the zone, and then you're moving with the wave to go higher. All right, because we've already decided that our, perspective is quite bullish, so we want to be taking buys instead of sells. Now, always note that you can literally also use your trend lines. Look at this beautiful trend line. Beautiful. Each time we get a top of the trend line, we push higher. All right. So bear in mind, this is what you need to be using to trade your NAS, and you can trade it like a pro if you're paying attention to price action. Price action is everything in trading. You've got to understand what is happening with price. Is price trending upwards or downwards? And where are your strong areas where there is a lot of liquidity based on the lows and the highs that have been created? Wait for that liquidity grab, and then you take your move in based on your directional bias. It's that simple. The process ain't complicated, so don't complicate it, don't sweat it. It's very simple, right? So you want to look for that area where you've got the break of structure, got that liquidity grab here, right? And once we got that, we can see where the direction started changing. And of course, we want to buy. So once this is changing in our favor and we see that, we could even decide that, listen, with the rejection of this trend line, we could enter right here. Let me zoom in, right? Because we've got this trend line here, you could literally see the rejection, right? Look at this heap of, rejection here, even though we're kind of consolidating. The rejection right at the line here, it tells a lot. And then you also have the double bottom resistance area here. I mean, we could have gotten into the trade right at this area, right at this area. We could have gotten in and, held our position. So, when you have all these things that are lined up, don't just be hesitant, because this could be you in the trade from that early, holding to get back to this area, or even this area here, right here, to match up with this, right? To match up with this area right here. We just wanted to get a top of this zone. So 1 to 5 be it. Yeah, that could be you, right? So I want you to pay attention to this. This is how you make your move on the market. You're using your tools and you're paying attention to price action. Price action is one of the best things that you can use to make money on the charts, because price never lies. Do not impose your biases on the market, but allow the market to give you what it's doing, and you take advantage of what it's doing. Take advantage of the direction in which it's going. That's it. All right. So you literally get that break, you get that retest. All right. So look, perfect break, retest, and you get in on the trade, right? You get in and you ride the wave. Okay. You allow market to create the structure. So you wait on the breakout. You got a retest of the area here, and you still waited for price to show you what it's doing. Trade not going to leave you. Just be patient. Okay. and then you're in, and this is without even massive drawdown. The entry that would have been taken here, flawless, because price would have just taken off with you right away, giving you all them TPs, right? It wouldn't even bring you back into any drawdown. So once you've hit TP, you'd be moving, just moving and trailing your stop, right? So this trade would be, risk free. Once you're hitting TPs, let's say this is your stop, you'd now be moving it. Each time we make a low like so, and we move higher, we move our stop, and then we keep moving it. Another low was made here. So we're locking in the profits. We're locking in the profits. As we're moving upwards, we're locking in the profits. So this is our stop, and we're locking in the profits. We ain't going to just be sitting in there and having all the risk open and we're in profits. No, we're securing the profits. And as we move up in our target to our target, we keep moving. And even if you said, you know what, let me just have an open TP, you could literally be moving up, and you could, be here, or just take your profits and be done with it. Yeah. So literally, this is, entry and exit all at once that I'm giving to you when it comes on to NAS. You want to pay keen attention to price action. Price action is everything. One of the key thing is NAS generally sweeps a high, break structure downward, then retest. This is your golden entry point. So we're waiting on that break structure, retest, golden entry point. We get in and we ride the wave. That's literally it. All right. Now, a little bit of risk management for step 3. Step 3 is all about risk management. Now, I want you to really understand that this trade is literally a 1 to 5. That means I'm risking 1% of my money to make 5%. That's impeccable, right? Beautiful. And I'm also trailing my stop as the trade goes on. All right, I generally go for a 1 to 3. That's my normal way of taking profits in the market. So I risk 1% of my money to gain 3%. So that's my general risk to reward ratio. Right now, always remember, this is a tip that you've got to remember: move your stop loss to break even or in profits once the trade is moving in your favor. I cannot stress this enough. Right. And always remember that you place your stop loss below your liquidity zones, right? You place them below your liquidity zones, or below the areas where you retest. So we had a retest here, stop loss literally be below here, right? Because we've already had the liquidity grab. We waited on it. And so once we've waited on it, that's where our stop loss would literally go. All right. So always remember that your next area to take profit, that's why I took profit all the way up here. So take profit is the liquidity zone, right? Which is, I've highlighted it before. The area where I had the massive push down where supply is, that's really where I could be taking my profits. Right at the tip of here, I could go all the way up there and take my profits there, because chances are we're going to come all the way back here, right? Which we did. So literally, I'm just showing you, right, in a simple way, how you can literally identify these liquidity zones and set your stop losses in accordance with the liquidity grab, right? Make the liquidity grab happen. Then you take your entry on the retest, put your stop loss below the retest, and your take profit would literally be your supply area or your demand area, depending on where which direction you're trading in, right? So winning is not about catching every trade, it's about catching the right ones. So I want you to understand that. And the fourth and final step that I want to leave you with is, now that you have this strategy, here's how to make it bulletproof. Use trading views features, and you're going to replay. So you're going to do this on replay mode to test at least the past 100 trades within probably the last couple of days, right? We want to look for recent trades. And once you're doing this, you're going to track how price played out based on waiting for these liquidity grabs, right? And then zoom in on where would you put your stop loss based on these liquidity grabs, where would you put your take profit, and look at how the replay mode works. This is how you bulletproof your strategy to make sure that you have a high win rate. Now, I want to show you a live breakdown because I've given you all 4 steps. Just remember, first one, we're getting our trend bias or directional bias rather from the higher time frame 4 hour or 1 hour. Then we're scaling down to the 15-minute for entry. We're waiting for the liquidity grabs of the liquidity zones, waiting on a retest. Then we're getting in on an entry, and we're zoning in on taking profit at the next liquidity area, be it a supply or demand zone. We're also going to be paying keen attention to our risk management, because risk management is everything. If you want to live to trade another day, you've got to be practicing proper risk management. I cannot stress that enough. Okay, 1 to 3, risk to reward is always very good. But if you are new and you just want to start tackling 1 to 2, that's perfectly fine. Always trail your stops once the trade is moving in your once the trade is moving in your favor. Always trail your stop loss and bring it closer and closer into profits to lock in those profits. And finally, back test to bulletproof, right? Don't take everything that I say as gospel. Go on the charts, open trading view, and go do your due diligence. Okay, now let's see if we can find a setup here on the charts. Let's see if we can find one. All right, so what I'll be waiting for is we've got this zone. Hold on, let me do this. All right, perfect. So I've already highlighted this area, right? Right here. So I'll do it based on the most recent. So we've been here, we've been playing here. Okay. I'll be waiting for a liquidity grab of this area. So I'm waiting literally for price to break above it, right? But if it breaks above it and retests, right, that would be my go-to for a buy if it's gonna go up, right? But if not, then literally I'm just waiting to see what price is doing. That's how I trade. I don't impose my bias. I'm waiting on price to come into my areas of interest. That's literally it. So because I know we've got a new zone here, if I'm gonna be buying, right, literally, I'd see if we can get a top of this area or a grab of this area. So let's see how price reacts. As we wait patiently, let's see. All right, so we're waiting on price to do a liquidity sweep. And if we don't get that, we are patient and wait. Now, everybody trades differently. There are some people who are really not patient. They just rush into a trade and then they lose money. For me, I'm very patient because I realize that patient pays. And when I wasn't very patient in trading, I lost more money than I should have lost. And so because of that, I've learned a lot how to be patient, right? I've learned a lot how to literally be patient. So some people would have just taken that little move, but you see, we're back into this area, right? We're back into it. And notice that we're literally above the moving averages, right? Above, fully above. All right, beautiful. So we've got a break of the resistance area. We're now waiting on, there we go. Perfect. So a break, nice retest right on top of here. So structure being created. So right here, right, I could literally be entering my buy position, or I could say, you know what, let me just get another confirmation, right? So right in this pullback right here, okay, this would be my buy position right here, And I'm going to be aiming for 1 to 3. Right, my stop would be a little bit here below this area here that has now become support. Right, and I'd be aiming for 1 to 3 because that's generally my rule. Okay, so with that, I'd put my stop, give my trade a little bit more breathing space, right, and get the 1 to 3 locked in. All right, so let's say we aim for that. There we go. Perfect. So this is literally what I'd be looking for. Nice break of this area, retest, little rejection here with the doji that you see forming. And with that, you can literally see that, listen, we're entering into this trade, right? And while we enter into it, let's see how it plays out. So nice push. Nice. We're in profits. So while we're in profits, this trade becomes risk-free and we'll move our stop into profits as the trade plays out. So we've created a low here. That could be your stop or new stop into profits. And as we, move up, we keep doing this. We keep trailing the stop. So let's see if we're going to go hit or take profit. Yeah, we'll be up in massive profits here before price comes all the way back down here. Would be up in massive profits. So your take profit would literally be all the way up here. Do you see that? So you would have locked in great profits. So you'd be trailing your stop along the journey and ensuring that, listen, after you've made a wave here, your stop would be here, right? And then you keep moving it higher based on structure. So you'd be locking in profits as you go along. And then, of course, you can clearly see that you literally even went straight back to, you literally went straight back into your areas. That's how the market moves, right? So bear in mind that we're looking for these opportunities to just catch some quick move. We got a break here, took a little buy, locked in some profits, right? We may not have gotten our 1 to 3, but we literally got 1 to 2, which is immaculate. That's fine, right? Never you see your trade in profits and leave your stop loss open. Don't you do that. Trail your stop because risk management is everything. Okay, so with that said, that's literally how you trade NAS like a pro. You look for these areas where you've got them liquidity grab and you go in on the break and retest. All right. And you can literally use your trend lines. Yeah, trend lines are very effective. But I want you to highlight, as long as you've got your liquidity zones mapped out, I want you to also highlight what the direction is that you'd be trading in, because you can see where we've got these break of structure in terms of the trend. If I had a trend line, let's say in this direction, right, I'd see when we had a breakout and a retest, right? I'd literally see when we had that going and when we had the transformation down to the downside. So you wanna be paying attention to all of these, right? Because you can literally see the difference now where we, hit take profit and push down. Trading is not as complicated as some individuals make it. It's rather simple. So I don't want you to complicate it. You just want to watch price action. Price action is everything. Market structure is your best friend, and trade with the trend. What the market gives, that is what you take advantage of and take your play from that area. Mark out your key interest areas and wait for your liquidity grab, and then go for your entry. All right. With that said, that's literally the 4 steps that you can use, not just to trade NAS, but to trade any pair that you know that you trade. It doesn't matter if it's a forex pair or an indices or a commodity, it works on everything. Those liquidity grabs, they often come, and when they do come, sometimes you're getting wiped out, when if you had waited, you would have gotten the perfect play in to take profit. So be patient, because patient pays. All right, with that said, this is the end of the video. I hope you enjoyed the little tutorial that I gave to you. I hope that, we have to sometimes look out for these liquidity grabs, even though we trade supply and demand and we're waiting for those aggressive areas and highlighting them. We want to wait for the liquidity grabs. When they happen and we see that retest, then we get in and we actually take advantage on the nice crossover of the moving averages as well. So bear in mind all of these things. Trading is not as complicated as I said, and remember to put God first in everything you do. Pray about this and he will help you to become profitable. Prayer changes things, and always remember that if God is in it, without a doubt you've got to win it. Put him first always. I cannot stress that enough. And I don't know if your faith is like mine, but listen, you've got to have faith in the process. The Bible tells you that faith as tiny as a mustard seed, it goes a far way. Have some faith in the process. You're going to come out as a top trader. You're going to transform the whole finances of your family. It's you that have been gifted with the knowledge and the wisdom of how to tap into the markets so that you can change the whole bloodline. So put the work in. Put the work in, and remember that you can click the link below and join our Wealth Academy. You can also click the link below and join our free Discord and come and have some convos with us. Come and join our community and listen. This is where we build wealth one day at a time. So we love you, we appreciate you, and we'll see you in the next video.